the onus of daily liquidity management back onto the banks. Anu is standing by to give us a lowdown on what those measures will mean. State Bank of India's Krishna Kumar also joins us on this conversation. Mr. Krishna Kumar, many thanks for joining in. Let me ask you about what you made of the policy yesterday. What happens to rate trajectory from here on?
Well, yes, I think in the policy and even in the previous policy, the governor had clearly said that if the CPI maintains the glide path which they project, they will not go in for further tightening. So I think if the inflation rate, if the CPI rate holds or it becomes better in the sense it goes down, there would be no further tightening of the rates.
Hold the thought, sir. I also want to find out what the impact of the overnight liquidity tweaking has happened. Anu, explain to us what the RBI has really done.
To put it simply, Harsha, they're telling the banks, this daily scrambling for funds and, how you're managing your day-to-day liquidity is not the RBI's problem. It's supposed to be the interbank market that is supposed to look at. So what they've done is they've reduced about 20,000 crores from the overnight LAF and said that we're going to add the same amount. So we're not taking money out of the market. We're going to add the same amount to the repos that we do, the 7-day, 14-day, 21-day. What does that do? It makes it harder for banks to sort of arrange for these funds on an overnight or a day-to-day basis. That will happen to the interbank market. So expect the overnight money market rate to see a bit of rise going ahead. That's what most treasurers of banks are telling us at this point. The cost of funding, especially for the wholesale funded banks, should see a little bit of an uptick, and that's a bit of a worry coming in for some of the smaller banks. Not for the likes of an SBI, of course, but why this has particularly happened is because of year closing. You saw before March 31st last year that call money rates shot up overnight. Saw a large amount of demand coming in because banks did not have the required liquidity. Dr. Rajan clearly saying it is not the RBI's mandate to bail out banks when it comes to daily closing as well as year closing. So figure out your balance sheet, figure out your cash responsibilities, and do it between yourselves.
Let me pose that question to Mr. Krishna Kumar. Mr. Krishna Kumar, what would this mean as far as your liquidity situation is concerned? Will it lead to a higher cost of funds?
No, I'm not very sure about it. I don't think it will have a very serious impact unless there are some, let's say, events which lead to certain reactions. But I think overall, I don't think this liquidity would really get tight in the system as such.
What then happens to lending rate trajectory, Mr. Krishna Kumar? Given that deposit rates are extremely sticky, how do you see lending rates playing out?
No, I don't believe that there will be a further increase in the lending rates. Of course, again, all this is said with the caveat that we don't know what happens in the future. But I think as in the current year, 14-15, if things go as they are planned, if things go as we think they should, I do not believe there will be any substantial, if at all, any increase in the lending rates.
We have seen credit demand in the system being extremely tepid. Do you see any recovery, revival in credit growth?
No, I believe that as far as the credit demand goes from the industrial sector, it is still, I think, off the highs. It should grow probably, but even today we see a very strong demand coming in from the retail book, the home loan book, the auto loan book, and also the agriculture loan book is also, the demand is quite strong in these segments. So it's the industrial segment where the demand has been muted, though it has been there, but not as high as we thought it should be.
What about distressed assets, Mr. Krishna Kumar? Is the worst for distressed assets over, do you think, now that new framework also comes into place?
Yes, I should think that we along with other PSU banks have really tried to get a fix on the entire question of stressed assets, and our management of the stressed assets these days is probably much better than say a couple of years ago. So I think going ahead there should be more clarity and more proactive measures we in the system, in the banking system, take to handle stressed assets. So I do believe that going ahead there could be a few cases, maybe stray cases here and there, but in general we seem to have got a hold on the stressed asset situation.
All right, so we leave it there. Many thanks indeed for joining us with your perspective. That's the view from State Bank of India on the lending rate trajectory post the RBI pausing any hike in the rate cycle. Up next, we take a look at the world's most powerful electric motorbike.